Good morning and a very warm welcome to everyone who's joined us today for the CEFC's Green Room webinar. Today we will talk through the Rewiring the Nation Fund and how the fund, as well as the broader program, is repowering Australia towards our clean energy future. Before we get started, I would just like to acknowledge the traditional owners of the land from which we are live streaming from today, the Gadigal people of the Eora Nation. I pay my respects to their elders past and present and recognise their continuing connection to land, water and culture. My name is Gloria Chan and I'm an Executive Director in the Rewiring the Nation team here at the CEFC, and I'm very pleased to be joined by my learned colleague Bobby Budakovich, also an Executive Director here in the CEFC in the Rewiring the Nation team. Bobby and I both have about 20 years experience each in banking, finance and clean energy investment, including in wind, solar and grid infrastructure projects. And in the last 10 years or so, we've both been at the CEFC. And in terms of our segment for today, we will be talking, having a bit of a fireside chat about the Rewiring the Nation Fund, some of the context around Australia's decarbonisation, sharing some of the wonderful investments that we've been using our capital to unlock, as well as sharing some insights into what's next for the Rewiring the Nation Fund.
Great, thanks Gloria. And also introducing our special guest, Stephanie McGregor, who is the Chief Executive Officer of Marinus Link. So Stephanie has over 25 years worth of international experience in infrastructure and energy. Stephanie has provided strategic direction and execution guidance for projects across the UK, the EU and Australia. Her expertise spans project delivery, sustainability, regulatory reform and project financing. Stephanie's previous leadership roles include GM for HVDC Grid Systems UK at EBB and Director at Offshore Transmission at the UK Energy Regulator, Ofgem. So welcome, Stephanie. In addition to that, we're joined by our esteemed colleague, Ryan Rathborne. So Ryan is head of grid for the southern states for the Rewiring the Nation Fund. He's responsible for origination and execution and has an intimate knowledge of Marinus Link, where he was the project lead for that transaction, worked closely with Stephanie and the team at Marinus Link. His experience spans over 15 years in energy, infrastructure, real estate and agriculture. So today's session's 1 hour. We'll also include an opportunity for the attendees to raise their Q&A. It looks as though we've got something like 500 registered guests, so thanks for all your attention and presence today. And yeah, please insert any of those questions and we'll get to those towards the end of the session. Once the session ends, there'll be a short survey that'll pop up on screen. Any feedback's greatly appreciated. So with the introductions out of the way, Gloria, maybe we'll turn to, I guess, the opening session in terms of the Rewiring the Nation Fund. So I guess, what is Rewiring the Nation and why is it important for Australia's journey to net zero?
Right. So maybe I'll get started just with a bit of context around the electricity system. So our electricity system is undergoing a massive once-in-a-generation transformation. Coal-fired generation, which has served us well, very well in the past, is now largely retiring. So most of our coal-fired power stations are retiring in the next 10 to 15 years. What this means is that we need to replace that generation with the new generation, and the lowest cost form of new generation is, unsurprisingly, renewables. And we have an abundant supply of wind and solar in our country, and so we're very blessed to be able to have that abundance. And in order to access that, these resources, we need to build enabling infrastructure, such as transmission and distribution network infrastructure. So that's basically the towers, the poles and wires that transports, I guess they're kind of like the roads, that transport electricity from where it's generated to our homes and communities. And we also need technologies such as storage for basically absorbing when the wind and solar is abundant, and discharging when during peak times when we need more energy. We also need other types of grid supporting infrastructure, such as synchronous condensers, as well as other technology that is used to enable an efficient operation of the grid. How does the Rewiring the Nation Fund fit into this? So what we aim to do is try and support all of this enabling infrastructure, and basically it enables more renewables to connect into the grid faster. We've got some core objectives with the Rewiring the Nation program. One is to accelerate delivery, use our investment to accelerate delivery of these enabling infrastructure projects. Not only is that important to assist with reaching the Australian government's renewable energy and emissions targets, but it's also important in facilitating continued security of our energy supply to our homes and communities. Secondly, we also look to support consumers, so electricity consumers, by reducing cost to consumers through our concessional financing. So we have access to about $20 billion worth of funding from the Australian government, and the point of that funding is to be able to provide concessional financing and co-investment to enable these projects to be delivered in a timely fashion.
Great.
Now, Bobby, maybe over to you now to talk about the Rewiring the Nation Fund. Since it's been set up in the last 2 or so years, what kind of projects or deals has the Rewiring the Nation Fund committed to, and how have they helped in unblocking barriers?
Great. Thanks, Gloria. So I might start actually by putting that in the context of CEFC's broader organisational, achievements over the last 12 months. So for the year FY25, the CEFC has committed $4.7 billion, enabling projects in the order of $25.7 billion. That's quite significant, and I think what's really relevant for the CEFC's objectives is the 4.1 to 1 leverage effect from CEFC's investments. So crowding in third-party capital to be able to support, the funding that's necessary to support the transition. More specifically, the RTN over the last 2 years has supported 7 transactions. 3 of those key transactions occurred over the last 12 months, and that includes, I might start with the close engagement that we had with Transgrid to support HumeLink and some enabling works at VNI West. Now, in that example, the focus for CEFC support was multifaceted. Firstly, what we were looking to solve for there was a credit metrics issue. So if you can imagine, notwithstanding the size of certain balance sheets of network companies, when they're embarking on significant infrastructure, the impact that investment can have on their balance sheet can actually adversely impact ratings. So the CEFC support through the Rewiring the Nation Fund sought to address those challenges, specifically with a blended product, both a concessional senior financing instrument to support the economics, as well as participation in some hybrid instruments to restore the credit metrics. So the CEFC's commitment for HumeLink and the VNI West enabling works was originally $2.075 billion. In addition to that, I guess the second key milestone over the last 12 months was CEFC support for Central West Orana Res, the largest res to date that has reached financial close. And CEFC support there was also multifaceted in that we provided $750 million to ACE Res as the network operator that was selected as part of a contestable process run by the New South Wales Government and Energy Co. And then in addition to that, we provided a $490 million loan to Energy Co to support some of the land bio-offset and development activities. Now, the rationale for CEFC involvement there was also multifaceted in that, one, when we have large-scale projects where the CEFC can cornerstone and underpin some of the financing asked that there is as part of these large-scale projects, we're there to try and attract and crowd in third-party capital and provide some support behind some of these projects. In addition to that, there's the cost to consumers, and it's a key objective of the RTN. So our involvement is there to drive down that cost of capital, both through attracting additional financiers to the table, but also using what we call concessionality, which is providing financing at below market rates to be able to then pass those benefits on through to consumers. The biggest milestone, and I guess Stephanie and Ryan are here to talk specifically around Marinus, but that's probably the most exciting transaction from a scale perspective, given it's CEFC's largest investment to date. But I don't want to steal Stephanie and Ryan's thunder, so we might park that one for later in the discussion. But also the other activity that we've been supporting is early works. So both early works, we've supported early works on the V&I West Victorian side with AEMO through TCV. We've supported Transgrid with early works activities on the New South Wales side. And then more recently, we've supported Tas Networks as part of their on-island activities, which also support Marinus Link. So we find that important too. If we look at the need to get these large nation-building projects underway, timely delivery is important for us. So both supporting the early works, enabling works, as well as the broader construction is relevant to ensure that we get the timely delivery of these projects.
Great, and perhaps it's also useful just to talk a little bit about the Department of Climate Change, Energy and Environment and Water, their special account, and how that's played into delivering some of these projects and accelerating them.
Great, thanks, Gloria. A really important point. So the CEFC's RTN Fund is $19.65 billion. In addition to that, there is $1 billion which relates to a special account that is operated from the Commonwealth Department of DQ. And we've worked closely and collaborated with them in the past, whereby when we look at some of the challenges with, for example, early procurement of equipment for some of these major projects, is there a way in which we can use that special account to fund alongside and dovetail into some of the financing activities that the CEFC is undertaking? So really there to drive or be there at the forefront to work alongside the broader RTN fund.
Excellent.
So Gloria, I guess that's some of the achievements, I guess, over the last 12 or so months. Looking ahead, where do you see the RTN, I guess, focusing its attention? What's next on the horizon?
Great. So we've been working hard over the last 2 or 3 years on the Rewiring the Nation Fund, including Ryan, Bobby, and myself, but also many members of our team. And as we look forward, why are we motivated to keep working hard for the Rewiring the Nation Fund? And it's because we've got 2030 and 2035 nearer term emissions and renewable energy targets. And so we see ourselves as a key lever of the Australian government to try and help us as a nation achieve those targets. So as we look at projects in the Rewiring the Nation Fund for enabling infrastructure such as the ones we talked about before, that is certainly a huge focus, and we're very open to seeing what kind of new opportunities there are in that space. In particular, some of the projects that you mentioned before, like renewable energy zones, which are essentially areas with a high concentration of excellent renewables resource, so wind and solar. We are continuing to look at those projects. So we supported Central West Orana Renewable Energy Zone in New South Wales. We're also looking at Southwest Res in New South Wales, which is going to be key to unlocking some further generation there, as well as New England Res Renewable Energy Zone, also in New South Wales. We are also looking at supporting projects, Res projects in Victoria. And so they're key in terms of unlocking that abundant resource that we have. Other types of projects could look like coordination of scale-efficient infrastructure, which is what we've done in previous projects in the CEFC. So looking to unlock, for example, scale-efficient, so high-capacity transmission lines that can actually be cheaper to build once and build right, rather than have a smaller transmission infrastructure that might be able to support a near-term renewables project. But you can see that there's the potential for renewables projects to connect in that vicinity in the near future. And so there is an opportunity to look at how we can look to build in a scale-efficient manner. In fact, we have done, the CFC has commissioned a report in the Pilbara, and Marsden Jacobs has helped us do some modelling which demonstrated that there is a need for about 2,000 kilometres of transmission line to be built in the Pilbara to decarbonise major miners and the mining operations in the Pilbara, which is a really important part of Australia's economy. And so there's certainly savings that can be had if you actually look at common user infrastructure. So that modelling showed that by having common user infrastructure, which means that people connect into the same infrastructure as opposed to building their own infrastructure, you can actually save, you can have 30% less, around 30% less transmission being built, which amounts to $4 billion in savings, and significant savings in renewables as well. So $26 billion in savings in renewables by having less renewables connecting all over the grid, but I guess sharing them and pooling them.
Thanks, Gloria. I guess that there's some of the experiences and learnings from, I guess, the Western Australian context, but it's also, I guess, an activity that we're focused on the East Coast in terms of whether it be at a large scale like the Pilbara or whether it be, I guess, multi-generation type connection assets. There are areas where, as part of the team structuring for these types of projects, we've been looking to understand whether there's a role for the RTN Fund to absorb some of the timing differences associated with trying to get multiple parties to the table to enable an economic outcome when it comes to the deployment of some of these projects, not just from some of the cost savings, but also, I guess, thinking about the impact on communities. If we can do things that optimise the design of and the deployment of these assets, I think there's a number of really strong reasons for why we should be pursuing it on that basis. So we, I guess, invite potential parties that have common user infrastructure opportunities to reach out to us.
I should also mention interconnectors and the value of interconnectors. So we've supported Marinus Link, which Stephanie and Ryan will talk through with us later, and that's a very important infrastructure project. Interconnectors are important because they help share renewable energy resources around the grid when you might have wind blowing in a particular area in Victoria, say, and not blowing in New South Wales or Queensland. And so by sharing the resources, that means that you can have overall a more efficient investment in grid and related infrastructure.
Great, thanks, Gloria. Okay, so we might move along now to our special guest, our headline act. So Stephanie McGregor and Ryan Rathborne. So we might start with some questions, Gloria, if you want to kick us off.
Sounds good. Thank you. Maybe I'll start with Stephanie first as our guest speaker, our special guest speaker. So tell us a bit about Marinus Link and why it's important to Australia's decarbonisation journey.
Hi everyone, great to be joining you here from Hobart today. So Marinus Link is an interconnector first and foremost, and Gloria, you touched on this. It is an essential piece of infrastructure that has the ability to connect separate electricity markets, and it's an increasingly strong feature of countries globally as they're making the transition to energy, to clean energy. And in fact, there will be the length of HVDC cables that are newly installed globally will exceed those that are in operation today. So that emphasises just how increasingly important interconnectors are as part of the clean energy transition puzzle. So the project will enable a connection between the electrical systems in Victoria and Tasmania, enabling the trading of energy, as you quite rightly highlighted, And in doing so, it creates a more reliable and stable energy supply in those markets, because it enables balancing supply and demand between Tasmania and Victoria, and gives both markets an opportunity to use their terrific resources more efficiently, so that the wind you referred to, the supply of wind and solar in Victoria, the terrifically flexible and strong hydro in Tasmania, and the growing diverse wind opportunities in Tasmania as well. So those resources can be shared and used to balance demand and supply between the markets, whether it's during daytime and nighttime peaks, or actually between the seasonal shifts that happen in energy supply over a year or 2 years. I think for Victoria, hydropower has the possibility to displace higher price peaking alternatives like gas, hopefully pushing down wholesale energy prices with a clean alternative. And for Tasmania, Victoria offers additional energy support and resilience to ensure security of supply to the Tasmanian consumer going forward. So I think terrific asset that will create more opportunity to balance, stabilise and secure energy for consumers in both markets.
Well, thanks, Stephanie.
Brilliant. Thanks, Stephanie. So maybe over to you, Ryan. So can you tell us why, I guess, the CEFC chose Marinus Link as its largest ever transaction?
Yeah, thanks, Bobby, and great to be here with you. So I think for the CEFC, there was really three things when we zoom out and focus on our policy objectives that we had to focus in on. The first was, is there a need for the project? And I think you look at Marinus Link, it's been reflected in the last 3 consecutive ISPs from AMO, and a high level of conviction from both the Victorian and Tasmanian governments who are willing to invest in the project from an ownership perspective. So I think from that perspective, we were really comfortable that this project should proceed. We then started to look at, well, how can we accelerate the delivery of that project? And then how can we achieve an outcome for consumers that is acceptable and palatable for both residential, small business and industrial consumers? So the financing structure was really targeted around those things. Marinus Link needed to move at pace. As Gloria touched on earlier, coal closures in Victoria are sort of well reported on, and that will really create a need for that increased interconnectivity between Victoria and Tasmania. There was also globally stretched supply chains. And so there was really, I guess, a window of opportunity to move the project forward now and not wait while projects, particularly in Europe with offshore wind and even interconnectors, start to soak up any sort of residual capacity. So I guess when we were thinking about it was, how can we make it happen now and not in 5 to 10 years' time once the need becomes more acute and potentially troublesome for the network. And then finally, I think the project did have some features inherent in it that led itself to a public sector funding and delivery model. So the 3-way government ownership combined with CFC debt, which ultimately is sourced from the Commonwealth government, it did allow the project to invest meaningfully in sort of pre-financial close costs that were necessary to keep the project moving towards, I guess, a traditional financial close and construction. It could move forward in parallel with electricity rule changes that were needed to achieve some of the regulatory and consumer outcomes necessary. We could take a view on some of the bespoke delivery models driven by the supply chain pressures that were coming out of the market. And it also allowed us to, I guess, work with the TasNetworks team on a Project Marinus total solution that included, I guess, reinforcing the on-island transmission that would ultimately be required to sort of build the full network. So when we put all of that together, we felt that there was a really compelling case to try and support this project through any obstacles that it might face.
Thank you, Ryan. And you did mention that other countries, so Europe, for example, decarbonising, and there's also a demand for some of the equipment there. Stephanie, how does your experience in delivering subsea cable projects in Europe compare to Australia? Are there any key differences or considerations?
I think time to market is a big one, and I know Ryan has touched on this already. No matter what market we're operating in the world, the certainty that enables investment to proceed and projects to proceed is quite material. In terms of difference to Europe, there's a much bigger pipeline for this type of technology and solution within the European market. It has grown a lot since the early 2000s when I was first working in offshore wind and then subsequently in interconnectors. And that growth of pipeline has actually fed itself. So it has given certainty to projects that want to connect to an increasingly clean infrastructure, that the signals are there, and it has meant that the demand and certainty for supply of this type of technology and solution is quite strong. For this project, as Ryan rightly highlights, the securing that technology capability in our supply chain really early was critical, and the backing of all three of our shareholders, along with the support of the CEFC, has enabled us to achieve that in a market that perhaps doesn't have as strong a pipeline as Europe. I think the second thing to highlight is again about time to market is environmental approvals and any permitting consents that exist around this type of technology and solution. With a market that is still moving down the transition path, we still have a lot to learn and develop in that space, and we can look over at what has been achieved in Europe. They're at a different point in their cycle with a huge amount of depth of experience for us to reflect on around permitting and consenting. I mean, I can even reflect on an example just here. So if I look back at Basslink, when Basslink was approved way back in the early 2000s, so the existing interconnector between Tasmania and Victoria, at the time there were about 6 separate acts, legislation that covered permitting and consenting for that project. At the time, the governments involved agreed to roll all of those requirements into a single process in order to proceed with what was called an integrated impact assessment statement at the time. And so, roughly way back when, that was about 1,000 pages of reports to support all of those consents under all of those acts. Fast forward 20 years and a project like Marinus Link is subject to 9 separate acts of parliament across those jurisdictions, and all of those processes are separate. And so across all of them, we've probably done about 10,000 pages of analysis and summaries in order to support those consenting processes. So I think as we move through the energy transition journey, and you referenced examples in New South Wales before, Gloria, I think there's a lot that can be learnt nationally about how we approach consenting to ensure we unlock the right projects at the right time. So they're probably the 2 biggest comparisons I would offer, or reflections, and we shouldn't hesitate to take the lessons from elsewhere in the world, but also reflect on the differences in our market design when we reflect on those things.
Thanks, Stephanie. And it's quite topical now, but given the EPBC Act is up for a revision at the moment and in Parliament, so very topical and relevant. Maybe just a follow-up question in terms of that, the remoteness. So many would consider the Bass Strait between Tasmania and Victoria to be a fairly remote part of the world. How did your team secure Tier 1 equipment suppliers and contractors to build the project when there's such a large global demand for HVDC projects?
Come back, you're right, we're a small little pocket of the world compared to globally what's going on, particularly in HVDC technology. I think the nature of this project, the scope that it provided, and the certainty that was wrapped around it was a key attractor for the supply chain we've managed to secure in Hitachi Energy for our converters, and Prysmian Link for our cables. These are companies, much like many who operate in that space, who do operate globally and look for the global opportunities. And a project like Marinus Link, with the certainty that was put behind it by the 3 shareholders, actually ensured that this project could offer the certainty to those suppliers at a time when they had capacity in their market, in their factories, and they could see a strong commitment from us as an organisation and also our shareholders to progress the project. We were quite fortunate to be able to run a tender process for those key critical global supply chain components earlier in the evolution of the project, which meant that we were well and truly on a path for that commitment from them 18 months ago, which has been a terrific signal to the global market and, in fact, other suppliers that Australia is serious about the ability to commit to transition.
Thank you, Stephanie.
Ryan, so I guess in terms of the investment barriers for Marinus Link, can you maybe describe what they are and how CEFC's concessional financing helped overcome those?
Yeah, thanks, Bobby. So ultimately, Marinus Link is being developed as a regulated asset, which will recover, the revenues it needs to pay for itself from energy consumers. This is a bit unlike Basslink, which, while going down a path towards regulation at the moment, was originally developed as a merchant interconnector. So very different dynamics. This meant that a sort of bespoke approach was required to sharing the costs between the consumers in Victoria and the consumers in Tasmania. And so as part of achieving a total sort of cost to consumers, the CFC was able to offer concessional finance to bring that to a level that was acceptable to the constituents of both of those user bases, along with a lower returning equity profile for the equity investors in the project. To give you a sense of the size of that concessional benefit that will be flowing to consumers, the AER submission that MLPL submitted to the AER showed that there was about $900 million in benefits in nominal dollars just over the first 5 years of the project's operations, which is roughly 2030, 2031. And so that gives you a sense of, I guess, how the concessional finance that we provided was really key to ensuring that there was a sort of sustainable revenue model for the business, and users could have certainty around what that looked like. Probably the other side of the deliverability of the project was, I guess, in order to progress the project as quickly as possible and to realise the benefits for consumers as quickly as possible, we did need to be willing to take views on certain elements of the project delivery. And so, as I touched on earlier, and as Stephanie touched on, there was procurement going on alongside, regulatory reform, which is going alongside environmental approvals, and I guess really being willing to invest relatively early in a structure that we were willing to do was probably something that differentiated our role from something that the market might have been able to do in the first instance. That's not to say that every project will play out like that for the CFC, but in the specific case of Marinus Link, where timing was such an imperative, we were able to take some of those policy-led views to ensure that we got to financial close when we needed to.
Thanks, Ryan. And I guess in that you mentioned that the use of concessionality was important for lowering the cost to consumers. How do we give effect to that? How does the CFC structure that to ensure that the benefit is in fact passed through?
Yeah, so I think the AEMC and the AER did some great work through 2023 and 4 to pass a change to the national electricity rules, which actually gives the AER a role in, I guess, administering the pass-through of concessional benefits from either debt and or equity to energy consumers. So the way that it works in practical sense is that there's an agreement between MLPL and the CFC that sets out the parameters for how much will be recovered for the cost of capital for the project. That's then submitted to the AER, who make a corresponding adjustment to the project's revenues. I think what we really like about that is it does bring in, I guess, the AER's role as a regulator to, I guess, provide a really high level of confidence about those benefits making their way to consumers. And that can be relied on for a long period of time because it's a contractual thing that the AER has the right to do through the NER. So we expect to use that model sort of going forward in future projects where we are targeting consumer benefits. And we think it's a really good development and gives more, I guess, confidence and flexibility at the same time for policy objectives being hit.
Great, thanks, Ryan.
Excellent. And maybe back to you, Stephanie, on the Marinus project. So Marinus Link is, in fact, a 2-cable project in the integrated system plan, and financial close has been reached on the first cable. What can you tell us about the second cable?
So as part of stage one, and you rightly highlight, we're proceeding on stage one, we're actually laying the foundations for stage two. So we can deliver it relatively simply when it is subsequently considered and approved. And so we've actually incorporated stage two, trenches, ducting, the route in our environmental approval. So that covers both stages. And at the moment we have the civil construction works for land occurring that will support the subsequent rollout of stage two at a future point in time. So essentially we are laying the foundations for stage two in progressing stage one of Marinus Link, which, subject to the ISP and future regulatory decisions, will enable that stage two capacity to be deployed quite swiftly. And, we have thought about that in the design of the system. We've also contemplated that in respect of our engagement with landowners around making sure, easement width will support that activity in future, right through to the way that we set everything up to connect the project in future. So really we are ensuring that this project supports the foundations for what can happen in future with stage two, and obviously a bit biased as people who've chosen to sign up to the journey on this project. I've got a team here who genuinely believe that we need to ensure not only do we deliver stage one well and to the benefit of consumers, but we are responsible in the way that we execute that potential future foundation for the stage two capacity. And it's probably worth mentioning in that mix as well is the whole project combined, when it's completed at some point in the future, massive asset and investment in the electricity network and in energy transition. It is also a significant investment in data capacity. It's a relatively small part of the project in electricity terms, but the fibre optic investment that's being made in both stage one and would be further extended in stage two, it kind of blows my mind that fibre optic, the spare capacity, so the capacity we won't use to support our control systems, will be more than 150 times the current 3 data connections between mainland Australia and Tasmania. So I think, these are investments that have a ripple effect beyond the electricity future and the clean energy future. And, we're really pleased to have the opportunity to lay some foundations for stage two as well.
Excellent. Thank you, Stephanie. So it looks like you're looking into the future to future-proof the project as well, which is wonderful. Maybe just a last question for Stephanie. Maybe before I do that, just remind the audience to send in questions. This is an interactive live-streamed Q&A and webinar, so very much welcome your questions. So have a think about those questions while we continue on with Stephanie. So last question for you, Stephanie. Now, what's your advice for organisations that are looking to partner with the CEFC for Rewiring the Nation projects, now that you're through the thick of it with us and on the other side?
Look, get in early. And I think Ryan touched on this earlier when he described the journey that the CEFC team have been along in parallel to us. Getting in early, CEFC, your teams are willing to engage as early as possible, earlier than you typically find in the private financing engagement, which has enabled us to have the mature discussions about the moving parts around this project, because it has had some key supply chain early navigating, planning, approvals. We've already swiftly after financial close appointed our joint venture partner they're a joint venture for the balance of works, which is Samsung C&T and DI Infrastructure. So, we've been able to continue moving on all of the things that are necessary to ensure the project is ready to proceed at pace in parallel to our engagement with the CEFC, because we've started that engagement really early.
Thank you. So the key is early engagement. I think that probably explains why we're busy, but we love being busy because we love to understand the context of the project so that we can enable timely delivery. Thank you, Stephanie.
Yeah, that's right. And I think, I guess that early engagement allows us to really understand what the issue is, like what is the finance looking to achieve. And I guess we've got the flexibility to fund across the capital stack, and really understanding which instrument, what type of financing solution is most applicable to a certain project, really, I guess, comes about through that early engagement. So highly encourage that. So I guess we're at 11:40, so it looks as though we'll throw over to Q&A. Gloria, I might start with you. So I guess you mentioned the recent study and research report that we provided or issued recently in regards to the Pilbara and common user infrastructure. There's a question here on that topic. So in terms of the Rewiring the Nation Fund, $3 billion is committed under an LOI with Western Australia. So what does that look like in terms of some of the projects that would be funding under that notional allocation?
Yeah. So thank you, Bobby, for that, and thank you to the audience member who has provided that question. So some context on the Pilbara: there's major miners there: Rio Tinto, BHP, Fortescue, and so there's quite a complex landscape where a lot of them have built their own infrastructure historically, so rail infrastructure, port infrastructure, including energy infrastructure. So they obviously need to power their mines, and that's mostly in Karratha and Port Hedland and surrounding areas. And it's a lot of area to cover. There's also LNG facilities there as well on the Burrup. And so there's a number of projects, transmission projects, that are looking to unlock renewables in the area. So that includes wind and solar. And naturally, transmission needs to be factored into that in order to power the mines that are there. So there's a number of projects there, about 4 projects that we are actively talking to with different proponents. Won't talk about the specifics, of course, and the individual proponents themselves. But timing, that's something that we are looking to, we have been actually looking at that for the last probably 18 to 24 months, very actively in WA. And so we hope to be able to provide investment into those projects soon. I think we are waiting as eagerly as you are to try and get a project underway in the Pilbara so that we can help decarbonise the mining sector.
Great, thanks, Gloria. I guess one of the other questions that's come in is, I guess, the composition of the financing and I guess the government involvement and CFC's involvement in the funding of Marinus, and sort of what that means for private capital. Ryan, can you I guess, provide some context there in terms of the approach that was adopted and what opportunities there are for third-party capital to provide its support for other, I guess, enabling projects that might eventuate from this transaction?
Yeah, of course. Thanks, Bobby. So Marinus Link was a relatively unique funding structure that was 100% funded through the 20% equity provided by the governments and the 80% debt funding provided by the CEFC. As Stephanie touched on, we needed to reach, I guess, a point of financial close on that transaction ahead of some key milestones on the project, such as the appointment of certain contractors for the delivery of the project. And that, I guess, drove the willingness from a public sector risk profile and commercial view that was able to be taken. I think flowing on from Marinus Link Low, there'll obviously be greater energy flows between the two states. Part of the rationale for Marinus Link is building out the solar and wind capacity in Victoria to export through those daytime periods, and we see that as very much something that the private sector will take the lead on, the development of those projects. Over time as well, there may be opportunities for greater investment in renewables as part of Tasmania's sort of commitments to its renewable energy market as well. So that again, we expect would be an opportunity for the private sector to actively engage in.
I would also add, Ryan, that there was a question there that asked about coordination of renewables in and around Marinus. In addition to Tasmania, there's also a lot of grid planning that's going on in Victoria. So the Victorian government recently issued, probably not recently, a few months ago now, issued their Victorian transmission plan, and that outlines onshore renewable energy zones as well as offshore renewable energy zones, and that already takes into account the fact that Marinus is already an enabling piece of infrastructure going into Victoria. Thank you, Brian, for that. I might go to you, Bobby, for next question. In providing concessional finance, the CEFC aims to support both viable business models for developers and also lower the cost for end users. Now, what mechanisms does the CEFC implement to balance these two outcomes?
Great. Thanks, Gloria. And thank you for the question, Leanne. So this is a really interesting topic, because I'd say that probably the key focus of the engagement and negotiations with our counterparties is ensuring that there is a right balance between, I guess, the economic benefit that's afforded to the counterparty, if it is in fact the counterparty that we're solving for. So CEFC concessionality can be used for multiple purposes. If there's an investment barrier, what is that investment barrier, and how do we address and I guess funnel that concessionality? Ultimately, given that we are custodians of taxpayer dollars, we're there to ensure that that level of support is minimised where possible to be able to unlock that project. The other element, and probably I guess the more important element, is that for the lion's share of our projects, that concessional benefit that we're providing through the delivery of a number of these projects is actually passed directly through to consumers. So as Ryan mentioned, in terms of the materiality of the impact, in the case of Marinus Link for the first 5-year period, the use of concessionality as a pass-through mechanism to consumers is really important. And it's important in particular during those early years as we're building that infrastructure, and the use case for that infrastructure starts to come to fruition. So what we also see is that in trying to find that balance, we're also trying to bring forward some of that use of that concessionality to ensure that the short-term impact, given the delivery of multiple projects, the impact to consumers is minimised.
Excellent. Thank you, Bobby. Now, there's a question that's been here from John, and I'm happy to answer that one. So the question was about the transition to renewables is exciting, but why don't we fully cost remote generation projects by incorporating the full cost on transmission? It would make sense to be building solar in the cities instead of remotely. There are vast areas above rail lines, car parks, etc., that could be used, and that could result in a massive saving for the entire network. And it would also be more effective to have microgrids and be equal to grid, which would reduce transmission losses. Thanks, John, for that very insightful question. So it is, so maybe just to correct what I have said before, so or to at least elaborate on it. So renewables, the cost of renewables is falling, and it is the lowest cost form of new generation. But when AEMO, who is responsible for keeping the lights on for us, when they do their modelling, they also incorporate the cost of transmission. They also incorporate the cost of firming. So for example, the storage, like I mentioned before, batteries, as well as pumped hydro, it could also be gas. That is all factored into their modelling. And what their modelling has shown is that when you encapsulate all of that technology, not just the renewables component, that is the lowest cost way for us to keep our lights on. And so when you talk about the generation that's closer to home, so on the distribution network, car parks, rail lines, etc., agree there's rooftop space, and so there's rooftop solar that is very useful, and a lot of people are continuing to install rooftop solar, which is amazing, and also now increasingly behind the meter batteries, especially with the federal government's home battery scheme. So that's fantastic to see. What I would say is that I think we pretty much need both, because we're electrifying everything. So we're electrifying our transport, we're electrifying our homes, we're also trying to electrify industry where that is possible. We also have major loads coming on, so major energy users coming online, and that is, for example, data centres. So some of the data centres, for example, that we're hearing, their connection into the grid, which is actually in suburban areas, is as much as 1 gigawatt, which is massive. Like that's a very big number. And so when you think about the amount of energy that is needed to use to power these projects, which we all use, like with Copilot, ChatGPT, it's very prevalent, and so it is something that will be a trend in our society, and that means that as a result of increased electricity demand, you probably do need to build both utility scale, and that means you need transmission, as well as the distribution network behind the meter assets as well.
Great, thanks, Gloria. Over to you, Stephanie. I guess there's a couple of questions that have come in along the theme of, I guess, R&D and I guess collaboration with universities. Are there opportunities to collaborate with the project? And if so, what might that look like?
So there are opportunities, and also not just about directly with the project. As a developer of the project and the entity that will own and operate this, we have an active role in both the Tasmanian and the Victorian communities to facilitate connections between our stakeholders with each other and also across the transmission industry. We're quite fortunate that this is a HVDC project, and actually it's going to include some pretty leading edge grid forming capability that will support the electrical systems at both ends. And we are actively engaging with education bodies in both jurisdictions about the opportunities to collaborate with them at a multitude of levels, which includes future skill development, STEM education, STEM support, awareness of career pathways. We see ourselves as playing a vital role in that, not just for this project in the next 5 years, but also the foundation for the rest of the industry. It is, deeply my hope that there are organisations and individuals who will work with us on this project and actually take that knowledge and experience into the wider industry, because as we can see when we look at Europe, transition isn't a 5 or 10 year thing. It is a fundamental change which will continue to see opportunities emerge, and Gloria, you've touched on a few of those yourself. So there are opportunities, and we're also keen to make sure that we facilitate those connections with our major suppliers who understand that they are working in partnership with us over the next 5 years as we deliver this project.
Excellent, thanks, Stephanie. And maybe while you've got the talking stick, what do you anticipate will be the biggest challenges to building Marinus Link on time, and what plans are in place to avoid delays?
Biggest challenges, I think, of course, I'm going to say we've set ourselves up really well at this point in the project life cycle to be prepared for the delivery ahead of us. We've got almost all of our primary approvals. We still have some that we're waiting for in Tasmania. We've got good investment support with yourselves and our shareholders, and we've got some terrific suppliers in place, and the last piece is just about to land. With that final piece being our balance of works partner joining, I think the key piece is about how we integrate those 3 major suppliers and work in collaboration. So projects like these have lots of risks at different levels, and it's about the early planning and collaboration within our team. And our team means not just the people here in Hobart or Melbourne or Traralgon or Burnie, but our team being our suppliers. They are partners in the journey. So any of those risks that are on the horizon that are natural in a project of this size, early planning, early engagement, working in the tent with them, also working in a collaborative way with our stakeholders in local communities and landholders to put really high quality effort into the planning and logistics about how we're going to do this project. So, that is a big priority focus for us. I think that philosophy and ethos in the way that we work will be instrumental to managing and mitigating any of the risks that are on the potential horizon for the project.
Excellent. Thank you, Stephanie.
I might throw over to you, Gloria. I guess given that you've taken most of the questions around Western Australia, there's another one here when it comes to the Pilbara. So what will be the procurement structure for the Pilbara assets? Fully government financed or a PPP structure? Which government is leading that?
Thanks, Bobby, and thanks for the question, Sean. The procurement structure is still an open question for now, still being worked on that, exactly what that looks like, except to say that each of the different proponents have, I guess, particular views on how to do that. What I would say is that it's unlikely to be fully government financed. There is a need to decarbonise the miners, and the miners also have, I guess, a desire to come to the table to try and contract as well for the electricity infrastructure assets. So I would say that it's something that is being worked through, but looking to each of the proponents to actually work out how that contracting would work with each of the miners. But there is a view to looking at how to not just focus just on that particular project, but in terms of meeting their particular energy requirements, but also building optionality so that there's an ability to build bigger now so that we can take advantage of scale efficiencies. Now, which government is leading that? Given state governments generally have responsibility over energy, the WA government is taking a very strong lead in this. Thank you, Bobby.
Great, thanks, Chloe.
Maybe I'll throw over to you, Bobby, to answer a question about social licence. And I believe this is from Gordon. So thank you, Gordon, for the question. Does CEFC embed social licence targets, for example, Indigenous co-benefits, Indigenous procurement in the supply chain into its financing approach in exchange for concessionality?
Great, thanks, Gloria. Yes, a very good question and very pertinent given the role that I guess the transmission project's having in terms of the impact on communities. What we encourage our counterparties to do is ensure that they engage strongly and they engage early, because the better that engagement, the increased likelihood that the project will garner the support that's necessary to provide benefits to all Australians, not just the consumers that are using the assets. Now, in terms of the financing approach, the CEFC, not just through Rewiring the Nation, but this even extends to the renewables activities that we've supported for over a decade now. I would say that the approach to due diligence and the approach to the requirements that we have when it comes to ensuring that level of engagement is to a standard that we would expect, is something that we're highly focused on. The Australian Energy Infrastructure Commissioner is also there to listen to some of the concerns from the community, and we engage directly with the AIC and through a committee, the Rewiring the Nation Advisory Committee, to understand what that feedback is and how that might influence the way in which we shape up our projects, noting that the way in which we think about, for example, the use of concessionality will be a broader consideration, not just from the social licence and Indigenous aspects, but from the broader activities that are being undertaken and the way in which our counterparties are delivering that project. I do know that, for example, if we look at Transgrid's procurement approach in relation to HumeLink, there are Indigenous targets associated with that, and we highly encourage counterparties to incorporate Indigenous procurement as part of its supply chain.
Excellent. Thank you, Bobby. And noting we're nearly at time now, I just wanted to take the opportunity to say thank you to everyone for joining our webinar today. A big thank you to our speakers, in particular Stephanie, for taking time out of her very busy schedule, actually delivering one of these nation building projects. So hopefully audience members have gleaned a bit about the Rewiring the Nation Fund, what some of our future focuses are, as well as a bit about the nation building project that Marinus Link is.
Thank you.